Tomas, we are back, my friend. Before we get to this market measure, I have breaking news from you. We received an email from Vanetta's dad.
Yes.
And he writes, my Blackstone is electric, but it's only available at Amazon or Walmart. The one at Costco is propane, and if he uses it indoors, Tom will die.
Okay, so that's why I circled the one at Costco, because I was there. I saw it. I like a shark.
Like a great white shark.
Yeah, because I loved it. I'm like, this is the coolest thing.
Right.
But then I thought about it. I'm like, I can only do this for tailgating, and I'm not a tailgater.
Right.
But it is mint.
You're a top, not a bottom.
That's right.
Yes, I
It
got
is
it.
meant for the back of your pickup truck.
Yes.
Because then you go to the game, you put it on the back pickup truck, outside.
Portable, not indoors. Different.
Cooking smash burgers.
Portable, indoors.
I heard you the first time. I know. Cooking smash burgers at the game.
Have you ever tailgated? I'm going to say 0.
I mean, not technically that I was invited to.
Market measure sponsored by the CBOE IV Index Relationships. Sadov, how
When
are
I was
you
in
at
Green Bay,
relationships?
and I parked in somebody's backyard, they were tailgating. There was a lot.
You went over there and stole a brat from them?
No, they didn't offer me anything. They offered my wife
didn't?
stuff.
Oh, I'm sure.
Here, would you like a hot dog or a brat? And I'm like, take it. No.
Do you want one for the gentleman you're caretaking for?
Take the brat, looks good. I'm taking the brat. She's like, I'm not taking the brat. I'm like, ugh. Yeah, I didn't know the whole deal in Green Bay, but supposedly when Nikki and Mike went up there on their date, on their weekend in Wisconsin, two single guys in the weekend in Wisconsin, nothing.
Brokeback Mountain, sure.
Not that there's anything wrong with it. They said they just went into, they said they just went and people were just feeding them.
They played it cool, man.
They played it cool. That's right. Not like you.
Act like you've been there before.
Right.
You can't play it cool when you're in a Bears jersey. I mean,
I don't think they were.
No, they would never do that.
Yeah.
I didn't wear a Bears jersey, but my son brought the whole family. He's a Charger fan. There are no Charger fans. Like Packer fans.
Chargers made it to the playoffs. I mean,
they didn't.
They didn't make it to the playoffs?
They stunk. The crazy thing about the Chargers is that, it's the only fan base in the world where nobody cares that you're a Charger fan. Like, if you go to Green Bay and you're a Bear fan, they throw beer on you, right? Or they hate you. They just boo you, give you the finger, whatever. If you're a Charger fan, they're like, oh, come here, get a hot dog. They're like, we don't care. Like, nobody hates the Chargers because they don't have any fans.
They're indifferent.
Yeah. Mm-hmm. So Cole bought Charger hats for everybody. I wouldn't wear a Charger hat. I'm like, I'm not a Charger fan. I'm not wearing a Charger hat.
No way that hat fit your head. There's no way.
I wouldn't wear it.
It doesn't matter.
I wouldn't wear it.
It didn't fit.
I
There's
wouldn't
no
wear it.
way your son knows you. There's no way he
wouldn't
bought
wear
you
it.
one.
He bought.
I call BS on your whole
He
story.
bought me one. He brought us all one. He brought everybody in the family one. I wouldn't wear it.
He just didn't want you to feel, not included with the rest
I
of
wouldn't
the
wear
family.
it. No. Corinne wore it. Case wore it. Patrick, who's a Bears fan, said, no way, I'm not wearing a Packer. I can't wear a...
Good for the goy.
I can't wear a Charger hat. And I'm like, I can't wear a Charger hat.
But he's now cooking for the next month. Even the S&P's up 11. Market measure sponsored by the CBOE.
Now, that kid's got a tough time going to Green Bay because he's from Wisconsin. He's from
And he's a
Sheboygan.
Bear fan.
He's a Sheboygan Bears fan. That's tough to grow up as a Bears fan in Sheboygan.
Yeah.
Because that truly is Packer country. You're only an hour away from Green Bay. That's Packer country.
Agreed.
And if you're from Green Bay,
He must have deceptive strength. He doesn't look like he's,
if you're from Green Bay
tough.
and you're not a Packer fan, you might as well you move.
And he did.
Yeah.
Yeah.
All right. We're going to look at implied volatility index relationships. Not as much fun as our relationships, but the next best thing. Implied volatility index relationships. This is what my life's come down to. We don't get to do the fun stuff. We get to talk about index relationships. What do you think this is?
Volatility compared to
Volatility
two
goes
products?
up. Volatility goes up. Your index goes down. Your index goes down. Volatility goes.
Or no, what does volatility do when an index moves higher or lower? I think is what they're going to look at.
What does the fox say?
Nee, 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 nee.
There you go.
Nee, 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 nee.
So volatility goes up, your underlying goes down. Volatility goes down, your underlying goes up.
Typically, in an
Are there
ETF
some
like
indexes where that doesn't
equity
work?
ETF, I don't. I actually would think it would be the opposite in like an oil or gold when
Oil, gold, silver,
right when
copper,
but I would think when they go higher,
platinum.
volatility goes higher. That's,
oil, gold, silver, cotton, platinum, natural
Metals.
gas, corn, wheat, soybeans. I would say all of those. Crude oil, natural gas, Bitcoin, corn, wheat, soybeans, silver, gold, all of those things, price goes higher, volatility goes higher. I would say stock indexes and stocks, price goes higher, volatility goes lower, price goes lower, volatility goes higher. Okay, I did this so far, I haven't even gone to the first slide. That's just my call. We don't know what it says. In yesterday's option job, we looked at how sensitive implied volatility is when markets move lower. Today, we'll expand on this concept of implied volatility sensitivity to price, and we'll look at the varying assets and their implied volatilities to see if there are notable patterns we can learn. It's cool. All right, next slide, please. We are looking for notable patterns. We did a study. We recorded price and implied volatilities of SPYs, Qs, IWM, USO, TLT, GLD since 2022. We recorded the average percent change in volatility when price went up or down by 1% and 2%. We analyzed the relationship between the price of implied volatility index and the percent of change of the IV index. If IV is too high to begin with, does it move less when there is a big move in the underlying? Let us take a look. Look how right Mr. Batista was. With the exception of gold, all assets have at least some inverse relationship with their implied volatility. Now, on this list, we don't have, they didn't use silver,
gas
nat
and
gas,
or any of the currencies.
or any of the other things we discussed, or the softs or anything like that. So this is SPYs, Qs, IWM, gold, bonds, and USO, which is crude oil. So I would think crude oil would be, but
It's surprising that gold volatility doesn't go down on a down move in gold.
the S&Ps, which is the SPY, had the largest sensitivity to implied volatility, and it is no surprise to me that the lowest was crude oil. I think crude oil would be inverse over long term, but short term, it's, whatever. Let's go next slide. Gold is the only asset that had a strong positive relationship between price and implied volatility of this group. I would argue that natural gas will have the same thing, that silver will have the same thing. There's a bunch of them. But in this case, implied volatility the underlying goes up 1% or 2%, and gold implied volatility goes up 5% or 11%. That's a lot.
Yeah, it sure is.
Everything else, unchanged or lower. So in other words, when the underlying goes up in the S&Ps, volatility gets crushed.
Which you would expect.
Same
No
with all the
surprises.
stock indexes, and gold and silver were pretty much unchanged. Let's go to that's perfect. So notice that the lower implied volatilities usually had a larger sensitivity to price, given a 2% move in the underlying. Gold and the SPYs had the largest sensitivity and the lowest implied volatility, while crude had the lowest sensitivity and the highest implied volatility. So this is kind of like just summing it up in a sense.
No surprises here, which is good, right? I mean, when you're trying to play for a volatility contraction, it works as you would expect, which is a good thing. It's good to validate it.
Yeah. So the crude oil had the lowest sensitivity to the movement, and the highest implied volatility, which is interesting because it's kind of like that's an argument for trading crude oil.
Sure, sure, sure.
The other ones are obviously, given the size of the moves and the lower starting point in volatility, a little more difficult. But I don't know. It's pretty interesting information, actually. I'm not sure. I'm trying to think how you would take this and apply it in some like very practical fashion. What do you think?
How to apply it in
Yeah, other than recognizing what's happening, other than like almost a realization of what's going on in front of you, I'm not sure that it has.
Well, I just looked at USO. I have a position in USO, and it showed me the average IV value since 2022, and the IV right now is 43 if they're looking at rank, and the monthly implied volatility is around 36. So I would say that USO is at or just under its average. So if I was looking to put a position on there, I might put my size appropriate, meaning a little bit less than I normally would do in USO because of volatility.
Okay. Let's go to the takeaways, see what they say. So since 2022, gold was the only asset that had a clear positive relationship with changes in its underlying price. Well, the only asset of the ones that we put on here. If you did any of the other ones like copper, silver, and again, some of the softs, some of the other ones, you would see the same kind of relationship. We saw lower sensitivity between big price moves and spikes in implied volatility if implied volatility was already high to begin with. That is really interesting, and that is an important takeaway. When implied volatility is high, you are going to have lower sensitivity to big price moves. You're going to have the most sensitivity to big price moves when volatility is cheap, like it is now. And this makes the case that selling premium in high implied volatility could be safer than in low implied volatility. For the same percent price move, selling premium in crude oil will not go against you as much as it would in SPY.
Beautiful. Let's take a quick 90-second break and come back. We got more Tasty Live after this with Mr. Scott Sheridan, followed by Jeff Joseph and Luckbox. It's Tasty Live.